Hello, everyone, and welcome to our Yardi Matrix Student Housing National Outlook on March 3rd, 2021. My name is Megan Furr, your producer for today's program. We are joined today by our hosts, Jeff Adler and Jack Kern. Our program will run about an hour, and we hope you can stay with us for the entire broadcast. We want this to be an interactive conversation, so please feel free to submit questions in the Q&A icon at the bottom of your screen, and we will try to respond to your messages while covering relevant topics. If we don't get to you, please contact us afterward for a more detailed answer. A recording of this broadcast and accompanying slides will be available after the program. Please note that what we discuss today may or may not be relevant to your situation. Please read the disclaimer carefully and consult your tax and investment advisors before making any decisions. Now, I am pleased to welcome Jack Kern, Director of Research and Publications, and Jeff Adler, Vice President of Yardi Matrix, to our program today.
Hey, everybody. Good morning, good afternoon. Glad you could join us. Jack, good to see you again. Hey. We're going to kind of get started and kind of go right into this. I'm going to kind of take my video off. And let's just kind of cover what we're going to talk about. I think we really want to focus on this time primarily on fundamentals. So we'll give you a quick overview, talk about, I'll call it a wrap up of the fall and some digestion of what happened, and then kind of look forward to what we see in the pre-leasing so far in 2021 and forward, and a little beginning of a discussion about what has been learned about the college experience and its implications at the beginning. So we're going to focus primarily, I think, today on items that are sort of very close to in front of us, because we're in the middle of, I would say, for the student housing industry, a bit of a storm, quite a bit of lack of transparency. And we're going to try and create some transparency on the sector and enable us later and later webinars and discussions to open up our vistas to a longer range time frame. So I think we're going to focus primarily on what's in front of us now. Okay, so our house view. Overall, enrollment did decline 2.5% in the fall of 2020. However, the 4-year public and private universities, which are really the focus of the dedicated off-campus student housing industry, really was quite steady. Pre-leasing for the fall term did end up about 5 points below last year, so that's a bit of a nick. And as we look forward to 2021, it's running about 4% below the prior year. Now, the real drop-off, as you'll kind of see, didn't really happen until, call it March, April. And so, it's, I would say, on par with the pace that we would have seen as the year ended in 2020. We do think that pre-leasing will pick up, but it'll be kind of late as the vaccines kind of get more deployed and things kind of, I'll call it, begin to a return to normal in the fall. Rent growth has been steadily declining on a year-over-year basis, but still on a weight average basis is still 1.3% above the prior year. So overall, if you look at the universities in terms of who's winning, who's losing, or rather who's winning or who's losing less, it really is the universities with the most pain. It's not instruction type, but it is rather location. It's either expensive locations that were with strict COVID-19 restrictions, or ones that are not flagship schools. And that's kind of where we see the break. We're going to talk about a hybrid model of instruction, which seems to be potentially emerging. And we'll also look at which schools are the most insulated from the potential of that. So if you look on a positive note, I'd say the particularly large first-tier institutions have done the best, and the best of those are ones that are in states and localities that were open for business kind of the whole time. Now, kind of what happened. So let's just go back and take a look at what it is we said, and what's kind of happened. We thought that campus closures really weren't affecting off-campus occupancy, and that is correct. There really is no widespread trend based upon the instruction type. We thought that a school's performance would be more dictated by supply and demand fundamentals and total enrollment than a school's reopening status, right? Well, partially correct, right? So yes, the underlying fundamentals of a school definitely played a role. However, we also noticed that the major universities that were struggling were either expensive downtowns or in states with strict COVID-19 lockdowns, or I'll call it second-tier schools, third-tier schools. The fall data told us as long as the school is open, it doesn't matter impact student leasing, and I think that's probably true. It seems to be correct. The headlines are full of noise. Supply and demand balance matters the most. Again, I would say partially correct, right? So they made their decisions early. Our data show that they did want to get out of the house, and they did. And we also think that leasing will pick up. And the drama about COVID-19 doesn't matter as long as the university is open, except if you're in a city that was expensive downtown or strict COVID-19 restrictions. Those did seem to have an impact. So let's kind of go into that. So overall, while enrollment did decline, and it did, the places that got hit the hardest were public two-year universities. Freshman enrollment did drop quite a bit, but again, public two-year schools got hit the worst. And so the focus of investment, which is of the industry, which is large public and private four-year universities, were steady. So that's kind of the item I would kind of focus in on. So this is just sort of highlighting the data of the conclusion we've drawn. If you can kind of see private for-profit institutions actually had an increase in enrollment. The public 2 years were the ones that got hurt. Again, if you look at this in terms of which type of programs, kind of lines up. The 2-year associate degree seeking were the ones that got hit the hardest. Graduate professional actually went up. So if you look at examples of places where enrollment actually increased, then you kind of say, hey, state flagship schools in cities that were open, tier 1 universities, larger schools. As an example, Purdue, their student body was up 1.3%. Georgia State up 2%. Kennesaw State outside of Atlanta up 8%. OSU up 1.5%. University of Wyoming 4.5%. Kentucky up 2%. So you can see there were schools that actually enrollment went up. So that's a good news. What about the ones that didn't do so well?
Jeff, before you do that, I think it'd be worthwhile to have just a quick conversation about enrollment patterns in previous periods. Why had it gone up so much after the recession, and certainly what's affecting this much more than what we'd seen previously?
Well, I mean, the typical pattern would be that, oh, okay, the economy's not good. Let's all go back to school. I'll basically ride out the downturn and come back into the labor market when the economy's better, right? And so that kind of aligns with what you would saw in the graduate school enrollments, which went up. And typically you'd see that same thing on the undergraduate side. And this seems to have sort of not quite that way. I think it's more of a redirection of folks as opposed to total increases, right? So I think this is a little bit off pattern. You know what I mean? That would be my take on this. Does that make sense, Jack?
It does, but also are we feeling that it's unlikely for this enrollment pattern to continue much longer?
I would kind of say that some of the trends that we're seeing here could be enduring, and particularly the areas. Now, the ones that I think snap back quickly is when the large cities reopen. Then I think those areas snap back. The one that I am less sure about is the tier 2 and tier 3 schools and how quickly they come back. And that is a function of what we'll talk about later, which is this notion of a hybrid learning model, which expands the reach of some of the higher tier universities. Okay. Does that make sense?
Yes, great.
Yeah. Okay. So when we look at the ones who kind of where enrollment went down, and I got to say freshman enrollment would have gone down further, you can kind of see they are tier 2 and tier 3 universities. Or larger cities where the cities were kind of locked down. And this is, I've alluded to this, and we'll discuss this in greater detail. But what we're talking about here is the notion of the technology that's been deployed in managing partial distance and remote learning now also creates an opportunity for schools to broaden their revenue base and access people they wouldn't normally have been able to reach, and also potentially people who wouldn't have been able to have got on the on-campus experience. Now the implication for housing is a little more nuanced, and we'll cover that a little bit later. But there have been some successful examples of that working out well for certain larger tier schools. When you go back to sort of where we ended up, you can kind of see that break point where in 2020, pre-leasing was ahead of 2019 numbers until we got into April. And then it kind of lagged and kind of stayed in there about 4 points below. When we talk about, well, we also began to take a look at, well, what about by asset class? So the Class A assets hurt, a little bit. It looks like the Class B the most, and Class C the least. Now, there's not a lot of assets in the Class C section. And you can see up until the very end, they actually were doing quite well, I think, because they're lower price points. Now, when we kind of move into distance from campus, we thought there might have been something. There really wasn't. The distance didn't seem to be a driver of leasing performance. It all was about the same. It was more along the lines we've discussed. What was interesting, though, if you looked at the sort of selectivity of the school, that did seem to have a pattern, right? So the most selective schools either were right on top of the prior year, or at UNC Chapel Hill's slightly above, where the ones that had higher acceptance rates tended to be a little worse. When we kind of break this out by school, we do see some schools did quite well in the middle of what supposedly was a pandemic, and their pre-leasing percent even improved. We do see that there were some schools that did worse. I'd be a little careful about the magnitude of the negatives. But I would say that, when I look at some of these large schools, UCLA, Rutgers, in New Brunswick, UW, OSU, things did seem to get worse. I'm a little cagey on, as worse as we indicate here, maybe not quite so bad, but some schools did get hurt, quite a bit. When we move over to, kind of absolute winners and losers, again, some schools crushed it. And so this notion of everybody's out 4 or 5 points, not true, right? There's definitely separation in the schools that did, some did extremely well, and there was some pain in certain schools. Again, if it's a major school like UCLA, UW, OSU, I think these bounce back pretty quickly. They're big schools; they just happen to be in the wrong place at the wrong time. But that I think will come back pretty quickly. As we go again, we also took a look just to understand, did the method of instruction make a difference? And the fact of the matter is, no, it didn't drive it. As long as the school was open, what in some format, it really didn't seem to drive it. What did seem to make a difference, the ones who did well, right, had a lot of out-of-state students and international. And the ones who didn't do quite so well, I would say, are more on the lines of less out of state and second and third tiers we've kind of mentioned before. Let's kind of go forward. So you can see here on a weighted average basis, the rent growth has kind of trailed down. This is from the beginning of 19 to where we are sitting today. And so it's gone down from 3. And, again, if you kind of look at the pre-leasing that started happening in September, it went from 2 down to 1.3. So overall, the industry is still doing okay, but less well than it had been previously. And if you look, but interestingly, if you look at this, you suddenly see a big spike in studio, right? The desire for privacy and your own bathroom. And we also began to see inside the two, particularly look at the 2s and the 4s, and the 2 1s, 2 bedroom, 1 bath, 4 bedroom, 2 bath. Those are the ones that seem to struggle the most. Again, logically, it makes the most sense. If someone was going to lease it, they would kind of want to have their own bathroom. And this particularly is an interesting comment when it comes to the viability of the dorms going forward, which often are shared bathroom facilities. When we kind of look at this in terms of rent growth by class, A's did better than the average. B's is where it kind of took a bit of a hit. C's performing about the same as B's did, as C's did. So sorry, C's did about the same as A's. So if you look at that, remember we kind of said that Class B were the place that kind of got hurt the most on pre-leasing, and also not surprisingly on rent growth. Distance from campus, what I found interesting is, again, we don't think a huge difference, but as we go forward here, the ones that are closest, a quarter mile, seem to be hurt the most. We're going to watch this to see just how relevant this actually is. It kind of doesn't quite kind of align with what I would have expected to have seen, but also it may have been the highest priced units. So we'll have to take a look at that. Universities with the highest year-over-year rent growth. Some real stunners, into ASU, Skysong, Wichita, New Mexico State, the main campus, University of Colorado Springs is a secondary campus. And so again, a number of these large state universities. USC kind of surprised me about the increase in the rent growth so far, given the fact that they also are struggling with pre-leasing. So that one may just be that the ones that are leasing are the highest priced ones. Versus anything kind of enough to maybe I'll call it a false positive, but the other one seems to be lining up reasonably well. When we look at the lowest ones, again, you can look at this in terms of GW urban area in DC, also very expensive. UCLA, also kind of expensive, but largely in-state. So again, you kind of look at this and we tend to see a bit more of a skew to that same urban area with areas that are locked down, or potentially, second tier schools. So that same kind of trend. But deliveries didn't really slow much. And I don't really expect deliveries to change much in the go forward. This is obviously 21. Not much has actually been delivered, so it's kind of a number I wouldn't really focus on. I'd focus on the fact that in 2020, about 2% of the stock overall got delivered.
And then points with respect to deliveries.
Yeah,
I know we've got an opinion on what we think is likely to deliver and what's likely to get caught up in the increase in cost for materials.
Well, I think the issue we have is the deals that are done and in the pipeline, they're going to get delivered, right? There's too much money committed for them not to get delivered. They may not hit exactly the pro forma that people would have liked, but they'll get delivered. The question I think we have is, will there be a for the deals that are early, right? The land's tied up, but the money isn't in place. Is there going to be a repositioning of those deals? That follows this trend on the pre-leasing and rent side, with a sort of skew toward the larger state universities as opposed to the second and third tier schools, which is where the industry had been attempting to, at least the development industry, had been attempting to kind of expand into, viewing that larger the schools had been more fully deployed, right? So if you look at these schools here, right, the ones that have the capture rate, that are higher, these are relatively low capture rates, so there is a lot of supply available already. Total transaction volume slowed, as not surprising. The deals that did transact were pretty much on par with the prior year. Again, not a huge surprise there. And when we kind of go through it and look at it on a quarterly basis, we kind of see the fourth quarter, pick back up. Second and third quarter were rough. Fourth quarter return to, prior to 2019 and first quarter 2020 levels. So that would tell me, and as we're seeing, as I talk to people in the businesses, there is transaction volume is, kind of recurring and coming back as people are sort of wrapping their head around kind of some of these trends. We hope through this webinar and through our discussions to provide more transparency to the market, so that more of the participants in the industry can see kind of the trends and then be able to feel confident in continuing their level of transactions. And if we look at the actual transaction activity, the Arizona universities were pretty active, but we have a lot of the large state schools very active on the transaction standpoint, which is what we'd expect, right? Deep markets, large schools, top tier universities, which are the most insulated from all of these trends and performance. Now, there has been a little bit of distress, but really not. This is just one example of a deal that that is in trouble and is transacting. But it's really a bit of a stalled lease up. It didn't do well in 19. It did even worse in 20, and it's kind of really in struggle in 21. But that is quite frankly the exception and certainly not the rule. Now, as we kind of flip over to 2021, so hopefully we put 20 in the bed. You guys have an understanding of what went well, what didn't go well, and why. As we kind of look forward into 21, we do expect the 21 term to have a surge in enrollment and a surge in pre-leasing activity, but it will probably come late being April, May timeframe as the kind of vaccine situation kind of clarifies. And I think we're likely to see that clarify very, very shortly. And I think if you look at the fall off in enrollment, it really was deferment of the freshmen for a year. I don't think they're going to defer 2 years. I think a year's about it. And with things going forward, so I think we're going to, in all probability, maybe even see a surge in both in enrollment overall. And again, it's going to come back mostly into the 2 years. But if you look at where 20 enrollment was actually among the large institutions, it didn't drop off much, so it's not going to come back much. But there will be some schools where you'll see a little bit of extra pickup as those who did defer kind of come back. Preleasing is off to a slow start, but we think it'll pick up. The ones the bed bath parity, I think when you look at the actual floor plans and the actual unit mixes at the properties, I think will probably be a key determinant of which properties do the best. Okay, and I one of the things reason that I'm fairly bullish about the whole sector is the dorm capacity just doesn't work. So something's got to get done with the dorms. They don't really work, which means that something else has to happen, and either public or private investment is going to concern. Will the universities want to put a lot of their capital, which you're going to see they're going to want to invest in their digital platforms, into physical plant at the school? I think less likely. So I think as the sector is actually well positioned to help facilitate the old physical plant into more relevant physical plant, both on campus and off campus. So that's why I really do think the sector, again, particularly for the tier 1 schools, is going to be quite positive.
Jeff, between tuition, housing, and inflation, where do you see pricing pressure coming up in 2021 and 2022?
Well, we've covered this many times before, and it's well-known fact that the cost of an education has been growing at 4 times the rate of inflation. And if, quite frankly, you look at the administration's actions, it's to provide more support to both the students who've taken out the debt to pay for those rising prices, and the schools and kind of the schools themselves. I'll be honest with you, I don't see a tremendous amount of price pressure. If you look at the returns to education are still quite high for many majors, not all. And the government support, which has really sort of allowed prices to increase. Those 2 main factors continue. They haven't fundamentally changed. I think the pricing pressure will occur again, I would say, at the 2nd tier, 3rd tier schools, where they will continue. I think they'll be more in a situation of competing with online education than the 1st tier will. So if you if you look at this in terms of a shakeout, I do think there will be a shakeout in the industry, as it were, in the sector between 1st tier and 2nd and 3rd tier schools. And I think the ones who are 2nd and 3rd tier schools are going to face increasing pressure for both enrollment and pricing that they will not be in a position to make up. So I think if you look at consolidation in the sector, just like in the tech sector, like the strong getting stronger, I think you're likely to see this too in the student housing sector. Does that make sense, Jack?
Yes, it does. Thank you.
Is that responsive to your question? Probably more important.
No, that was that was good. I mean, I know the other aspect of this is people are going to be thinking about what pricing power has returned to owners as opposed to just being able to maintain the status quo.
I think pricing power will return to those again. we've kind of probably have beaten a dead horse by now, but the schools that are the best positioned in terms of top tier schools, with large enrollments, those are where pricing power will return. I'm not at all certain. Again, assuming that the cities open up, that California opens up, New York opens up, Chicago opens up, Philadelphia opens up, that the pricing power will return to those schools as a lot of the out-of-state kids feel more comfortable, going out of state and resuming their kind of normal enrollment patterns. We have seen along this, if you look at this slide, a burst of increase in applications. But I think it's mostly driven by the fact that you don't need an SAT score to a lot of schools. So it's kind of like, hey, what the heck? Put it in, you might get lucky. And so if you look at the most selective schools, they've seen this surge in applications for the coming school year, which I think is way higher than the actual number of kids who will enroll. But also on a positive note, seen a very large increase in applications from international students, except for China, which bodes well for that portion of the enrollment. One of the things that I found really interesting, we alluded to this earlier, was looking at the school's acceptance rate and then how they can kind of play with the ability to get their enrollments where they want them to be. Now, one thing I found kind of interesting was that, but 42% of the schools take 70 to 90% of the people who apply. So you're looking for those who have that, I'll call it, pricing power, would be those sort of, in the under 50% range, which is about 25% of the schools. And then also, obviously, to the certain extent that that's true, then also the folks who are positioned to provide housing in those schools will also do well. And again, we kind of see this here. If you look at Georgia Institute of Technology and University of Florida, they've done pretty well. If you look at Portland State and Texas Southern, they've struggled, right? Their acceptance rate was already high, and they're hit at the margin, much more than some of the larger, more selective public universities. Overall, as we look, for this year, pre-leasing is running about 4 points below last year's pace. And again, if you look at where the drop off, if I overlaid 2019 on top of this, 2020 would have been higher. And then, only around March, April, would it have kind of gone the other way. So this is consistent with the pattern that had been seen, at least on the national level, with the way last year ended. Okay. Again, we hope and we expect that this actually might pick up as we head into May and June in a reversal of last year's pattern.
One of the questions that comes up about pre-leasing is, do you think that parents, when they're putting their kids in school, even as freshmen, if they're allowed to, are going to want to put them in apartments where they feel they're safer rather than putting them in purpose-built housing?
Well, I think purpose-built housing, okay, if with bedroom bath parity, is actually way better than, I'll call it, the gray market, okay, and way better than the dorms. So if you're sort of going and kind of order of magnitude, if they can, from a freshman or upperclassman standpoint, I think dedicated student housing, because it's by the bed, with bed bath parity, right, with those two caveats, I think is a much better choice than an apartment. And again, it's also a question of what's also available and the quality of the stock of that housing. Right. So the question you bring out is more relevant if it's a large city with a very deep rental market and a very deep shadow market.
Sure.
Make sense? Yeah.
Sure.
Okay. When we look at the university with the most growth in pre-leasing for the coming year, you see, again, large universities that are picking up nicely. The UNH, Pennsylvania State University, University of Georgia, off to a really, really strong start. So a lot of these schools are off to a great University of Maryland, College Park, which is the main campus, off to a really nice start. There are a few that are struggling. I've highlighted those. Again, I think it may not be as bad as we depict here, but they are struggling a little bit more. These are universities that tend to be in places that are a little bit more locked down or have very high out-of-state percentages, and people may kind of be holding back. I did find the whole, Philadelphia cluster to be amazingly consistent, and I would have been surprised, but some more around what's going on in Philadelphia, perhaps. So I do think some of these things pick up. I don't think they are sort of preordained or will be there forever, but there is some spread between university performance. When we look at the absolute winners and losers, you'll kind of see some of the same kind of trends kind of happen. University of Wisconsin-Madison, very almost fully leased up already. Some of the other schools really, leasing up very, very quickly. And then a group of universities that do seem to be struggling a bit. Again, I do think they'll be able to pick up rather quickly.
Well, speaking of the University of Las Vegas,
yes,
which of the schools that you see not performing very well are you going to bet are going to do a whole lot better?
Well, I do think, let's say UCSB will come back, I think, pretty quickly. UC Davis, USC, I think will come back pretty quickly. University of Mexico, which had done quite well last year, I think will come back pretty quickly. SDSU, OSU, Temple in Philadelphia. I think a lot of these will come back, fairly quickly. I would be a little worried about somebody like Eastern Michigan. Maybe University of Houston, University of Memphis. These are sort of Portland State University. I think University of South Alabama. I think that's in Mobile. I think some of those schools are likely to struggle some and may not come back as quickly. And those that, again, very consistent with the theme that we've had through this entire kind of discussion. Again, we kind of think that the type of instruction doesn't really play a role here, as we saw in 2020. I don't think the same thing. I think the same thing holds true in 2021. There is inventory still getting delivered, actually quite a bit, a fair amount. And the universities in the South and the Southwest are adding a lot of inventory, and I think by and large, those will tend to be absorbed. UT at Austin is maybe one of the reasons that it's struggling a tad. Just got a lot of inventory. 20% of the units under construction with a capture opportunity. That's not that high. So again, you kind of look at some of these places. I think they may have a little bit of pricing struggles and leasing struggles kind of getting absorbed. Because if you look at some of these schools, Florida State, University of Arizona, Arizona State at Tempe, UT Austin, Kennesaw. These are big schools with a lot of housing.
Hey, Jeff.
Yeah.
Quick question, and I'd like to remind the participants to submit your questions in the Q&A icon at the bottom of your screen. But a question related to this slide that you're on. Do you see pressure to renovate student housing properties, either to convert more units to studios or bring the hard-hit Class B to appeal to more renters?
Well, I think this is going to be absolutely the basis of a school-specific, kind of leasing and supply-demand balance. But I do think if you think about this, it's not that easy to convert units, right? Given a floor plan, it's very hard to convert the units into a bed bath parity if it isn't, because you're giving up units in some way, or you're adding in plumbing, which is really hard to do. So I think that's going to be a big deal. Is the extent to looking at the unit mix of a property, and if it's got a struggling floor plan, a unit mix, it's going to have a hard time shifting. And again, it's not that easy to change these unit mixes. Now, if you're looking about renovations of Class B to Class A, that's usually and always driven by what's the rent spread at that school and how it's performed. And so I think there will be opportunities at some of the best performing schools to take Class B and renovate them, because that's a straight value add kind of play. But I think, and this is what I do think the trend will we may see is a shift to value add and transaction activity in the largest schools, as opposed to development activity at third tier schools, right? So I think that we may see more as the stock matures and enrollment kind of begins to level out at the largest top tier schools, which is kind of like, you're not making many more top tier schools. That those properties will become more value, and the stock, as it becomes, as it ages, will be in a position to renovate, just as it would have been in multifamily. But remember, most of the stock in dedicated student housing is 20 years or newer. So probably the first tier of dedicated stock that's 15 to 20 years old is going to be kind of in a position to be renovated. Is that responsive to your question, Megan?
Yep, absolutely. Thank you.
Okay, super. If you look at kind of development and what's useful and what's in and out of favor. So obviously, Wi-Fi connection and high speed connection is an absolute must-have and a big utility. We've seen a growth in apps that allow students to make requests for services remotely, more outdoor and open spaces, and more of a touchless environment. I do think an IoT upgrade has good opportunities here to control both the costs and access, and becomes more touchless. So I think the IoT component here would be a part of a general kind of upgrade for assets that are a tad older. We've mentioned this before about the bedroom and bath parity, and those, particularly the 4-bedroom, 2-bathroom, are really kind of struggling, and completely understandably. And this may be an issue that continues, or you'd have to have very significant discounts for people to overcome their desire not to share a bathroom. And I think size of the kitchen may be interesting, right? In one regard, if you're get quarantined as a group, you don't want to go to the dining hall. You want to cook and have to cook. So the question of cooking versus bringing food in. Obviously, I think the preference might be for takein or delivery, but there is a budgetary constraint in terms of the size of the kitchen may actually desire to be growing. Now, one thing to note in amongst everything that's been going on is the student housing sector is continuing to attract a significant amount of capital. So here's some just high profile deals. And this is just a selection of that. We have, we pierce the LLCs of all the owners and managers, and also the LLCs of the buyers and the sellers. So we have quite a bit more detail on all the transaction activity that's going on in the space. But these are just some high profile deals. Global Student Accommodation Group out of the UK bought a large portfolio from University Communities based here in Denver, and CalSTRS. So they did quite well. Core Space, is trying to put $1 billion to work. Also some major transaction with CA Living and our Capita. So there's a lot of activity and capital being pushed into the space. And I think if you look at that, you'll also see that it tends to align with the trends that we've been discussing, today. And if we look across sectors, right? If you look at the sectors that are attracting the most institutional capital, it is sectors related to housing of some sort, multifamily and tech hubs in the suburbs, single family rentals, student housing, also storage, obviously industrial lab space. And there's a movement of capital into these sectors and out of office, retail, hospitality, and to a lesser extent, urban multifamily. And that capital needs to find a home, and student housing certainly is one of the homes that it's finding. Now, as we kind of go to kind of what a bit of a summary of what we're believed to be the case, really is, and I'll focus on what's happening next year, in this coming years. We think the sector performs well. We think it comes back late, and it comes to universities that are the tier one schools, and I think also you'll see a recovery of the urban cores, California, New York, Chicago, Philadelphia schools, as quote unquote life returns to some form of normalcy, particularly at large first-tier institutions. I think the ones that are the most vulnerable from a medium-term perspective are the second and third-tier schools. So that's our take on things. I'm going to, Jack and Megan, before we go to the next section, any other questions that we should address, and before we kind of dig into going to a more conceptual framework of things?
We had a number of questions come in, but let's hold those to the end. Those of you on the call, thanks for sending in your questions. We will be getting to you shortly.
And also, I want to remind everybody that all the slides will be available for download. We'll follow up with everyone after the webinar's done. We always do that as a matter of course. So the first two sections, I really was focusing just to cover the core basics of what the heck happened, right? And where do we see things so far this school year? Because in my view, the need for transparency in this industry is very high, and investors and operators need some level of clarity as to what exactly is going on so that they can kind of position themselves in the short to medium term and kind of reduce a level of uncertainty and enable capital to kind of transact and development to go forward. And I hope we've been able to contribute something by just creating a level of transparency. Now, beyond that, and this is a topic that we wanted to begin to introduce, there's lots of things we could spend time on in terms of the value of education, the cost of education, and where some longer trends enrollment we think are going to go. But one of the things that you clearly have to sort of begin to come to grips with is the fact that education has been delivered in some online or hybrid form is something that you don't unlearn. Okay, once you've learned it, once you've kind of crossed that chasm, particularly on technology adoption, you don't sort of not learn, you don't unlearn it. And that I think is one of the big issues. Now, the ones that schools that have done well seem to have those that had an infrastructure already. So as an example, right, so why would a school do this, right, is one, it enables them to take probably a fair amount of existing content and spread it over a broader platform, right? It expands the university's target market, creates a wider student audience, and to a certain extent enables them to access segments they couldn't have reached before at a very different price point than they could have done before. So that's the example that Georgia Tech's master's in computer science only cost $7,000, and they exceeded 10,000 enrollments for fall of 2020. That's a big number if you think about how much additional revenue that is, and that's way above the marginal cost of putting that program together. So I think that is a big deal. It does require some work. You have to have some partnerships. You have to get some online degrees set up, and also the coursework has to be repositioned. But I think we're beginning to see some data points about the potential for that for certain universities. So that the traditional model, right, is everything was online. Online classes and in person were separate. They were different. They had different structures, tuition rates, degree requirements. They didn't match, and everything, other services that the university provided were really in person or exclusively on campus or exclusively online. This hybrid model is where you begin to sort of try to meld things together. You reimagine the courses. You have some version of what's in the class versus what's not on class. So there's this hybrid notion of what that could look like, which expands a school's reach, if you're talking on a hybrid basis, within the metropolitan area, right? So Georgia State, UCF, Arizona State created digital backbones, right, which allowed them to keep track of the students themselves, how well they were doing, as well as offer classes that had this blend of hybrid versus in person. Now, to the extent that the hybrid in person allows them to go deeper into the metropolitan area, that could have a negative impact on the educated student housing, because more of the metropolitan area students need not live in the dorms, because if they're only going to school, in person, just like we talk about in multifamily, work from home versus work from the office. And if it goes to a 2 to 3 day kind of session, are more people likely to live further away from the office? Here, the question is, are more people likely not to live close to campus if they're going to class less often, right? So I think that's one of the issues we kind of have. So, if living on campus is less necessary, so more students could commute. What universities would be exposed to that? Those that are in large metropolitan area. If it's a rural school, that's less likely to happen. So if you look at this, the ones who tend to be most exposed would be universities near large urban areas with a large in-state student base, right? So while this might be great for the university, it might not be so great for dedicated off-campus student housing providers, right? Because of that same impact. And so that's where we wanted to at least think about this as a new potential exposure that will need to be evaluated and monitored. And so we just happen to put together a list here of schools that are sorted here. These are the ones that are most at risk. Urban universities with the highest percentage of in-state freshmen. So you kind of can see, Wayne State in Detroit, UT San Antonio, UC Riverside. These are the universities that, to the extent that there's off-campus dedicated student housing, these are the universities that could get hurt more than others. And we kind of rank order that from most at risk to least at risk, right? So this is another filter for us to put through. And if you think about those schools that are most likely to do the best, right? We've already talked about selective schools, tier 1 universities, right? And to a certain extent, growing state populations. That's the ones that are doing the best, right? And once we're past COVID, we can kind of remove that filter. And then an additional filter we want to look at is urban versus non-urban, and the extent to which that school is deploying its digital backbone to create more of a hybrid approach. And I think these things will take time, but I think it's something to put on the radar screen as you continue to evaluate. Now, here's a list of universities that 30 minutes or less from an urban area, so there's potentially some risk. Note of UNC's Chapel Hills, which is the University of Oklahoma at Norman, Kennesaw State, which is outside of Atlanta, which is so these are some where you'd want to watch that. And then these are schools that are the least impacted. Now, again, we'd have to put this through a filter of selectivity and tier 1 schools between those that are sort of the least impacted and those that are potentially impacted a bit more, right? So University of Florida, Gainesville, kind of one of the ones that would be least impacted. So kind of the final wrap up here is, this is maybe a third restatement given everyone's time, and I do appreciate your time. So where do we end up? Enrollment was down a little bit, not so much in the 4-year schools that are really form the backbone of dedicated off-campus student housing. Preleasing was nicked about 5 points. Again, wide variety of performance along the lines we talked about, tier 1 and universities, cities, and states that were open for life. The ones that were hurt, tier 2, tier 3, as well as cities and states that were locked down. Preleasing's 4 points off of the same pace, and I would say on par with the way the year ended last year. We think it'll pick up. Rent growth is still positive but slower, kind of lining up with the preleasing kind of pace. So we've kind of talked about which schools, what didn't matter. What didn't seem to matter was type of instruction and distance to campus. But the other thing we would highlight is the unit mix. Bed bath parity being very, very important. I continue to be optimistic about the sector. I think you have to be a little more selective, both in terms of the bed bath parity as well as the type of school. And we've kind of laid out a range of criteria for you to look at and as we move forward to providing more transparency to the sector. So that's a thank you. The lawyers make me make sure I put this on here to make sure that we've appropriately noted things, both our disclaimer and our copyright notice. And then I think I'm going to say hello to everybody again and ask Jack if you've got any further questions that have come in, Megan or Jack, anything that is of interest that we should cover in our remaining 10, 15 minutes together.
I think just as an introduction, a number of people are asking questions about good ways of understanding tier 1, tier 2, and so forth, and also A, B, and C. So if you could give them a view about how we've been evaluating that, I think it would give them more context.
Sure. When we talk tier one university, we're talking about large state universities that are in a research conference, right? So it's a R1, R2, or the main conferences. So that kind of talks about large, enrollments over 30,000 students. So we're talking about very large institutions that are the flagship schools of their states. So that's how I think about, tier 1 university, obviously, and major private schools. But that's how I would think about those things. Also, you could look at the one quick way to do it numerically is just look at the acceptance rate. It's another way of looking at that. We'll also give you an indication of that. When we talk about A, B, and C, we are kind of basing it upon our improvement ratings that we use to look at assets, which is a patented process. That we have 12 criteria for improvements, really based upon unit mix, ceiling heights, and other amenities, and how we kind of bucket that. And that's actually on our website. You can see under our methods an explanation of our improvement rating system. So that's how I think about A, B, and C's. It is a quantitative basis as opposed to any kind of, it's not relative rents at all. We don't look at it that way until when we're evaluating the improvements. Does that make sense, Jack?
Yes, indeed.
Okay. Any other questions that have kind of come in?
I thought it's an interesting question about China.
Okay.
That some people had said fundamentally that a lot of the schools have lost a fair amount of their population as a consequence of what China's doing. And is that likely to come back? And what's that going to mean?
Because it's so geopolitically sensitive. I think there's more uncertainty around it. I mean, I think the increase in applications from other countries is a positive sign that the U.S. Remains a magnet for higher education. I think as it relates to China, there is just more scrutiny about the geopolitical situation. How are relations between the U.S. and China going to improve or not improve? They already sort of, it's unclear to me that they will get sort of demonstrably better quickly. And there also is now a greater security risk or recognition of that. Often a lot of the Chinese students may have, or some of them certainly, would have ties to certain security services, internal security or espionage agencies. So there's the enrollment from China will probably not come back so quick. I think there's just going to be, that one is just going to be something that to accept that the relationship between the two countries is strained and has not really found a new equilibrium and may take some number of years to do that. The change in the administration is probably more of a change in tone right now as opposed to a change in substance. And that will take some time to sort its way through. Would be the only thing I would say, Jack.
Just out of curiosity, have we seen any indications from quite frankly, the Middle East or Africa or the other parts of the country, the other parts of the world rather, that are not sending as many students as they used to?
Well, again, I look at the application stats that would say that, there's been an increase of a meaningful level across a wide range of economies. But the truth be told, right, it's still unclear when international travel truly recovers. So I think that's going to be a wild card for the next year. And I don't think this really kind of gets reformulated for about 2-3 years. So I think the international student component is likely to be diminished for the next couple of years.
Okay. Megan, did you have anything else that came in?
Any final questions?
Yeah, we actually do have a few.
Okay.
For properties without model apartments prior to COVID, we would just show occupied apartments with our tenant's approval. Have you heard any indication if there's been any pushback from current residents not wanting their apartments shown, which would make it more difficult for pre-leasing?
I don't think so. It doesn't seem to be a huge problem. It's a little problem, but if it can be done virtually, right? You can set up a virtual tour, then or you can record a virtual tour ahead of time, which is this is what our floor plans look like, and these are the units that are available with whatever vacancies you do have. I think there is a greater acceptance of remote leasing than there ever had been in the past, even if it's a live tour of over Zoom, quite frankly, a Zoom tour, much less a pre-recorded tour. The one thing that does seem to have occurred is doing things virtually but live seems to have picked up quite a bit. There hasn't been as much of a acceptance of consumers by pre-recorded virtual tours. But the notion of a pre-recorded, of a virtual or self-guided tour definitely seems to be taking off.
Great. How do you see common spaces changing, and do you see a significant amount of renovation to common spaces to keep up with design trends? They seem to be very custom and upscale compared to years past.
Well, the common space, you have the same kind of issue as what's the purpose of the space, okay? The rooms themselves, right, lend themselves. I think there's going to be a desire. So you're talking about sort of pre and kind of post COVID, right? There's always been a social aspect to it, always, and it will return, right? I think there'll also be more of a kind of almost the equivalent on the multifamily side of another place to do your work, another place to study. Or there's always been a notion in student housing of the small group meeting areas. Obviously, there's the pool and social areas, and which have been major attractions. I think there'll be more of a shift toward working cubicles or private work areas than there maybe had been in the past.
Sure. Are you seeing universities continuing to de-densify the dorms and relax on-campus requirements for the 21-22 school year, resulting in increased demand?
I believe that is one of the meaningful trends that the schools are having to deal with, which is their dorms, in large pace don't work. And so the same trends we saw in 2021, where they had to basically de-densify, that need hasn't gone away. And I don't think they're in a position to sort of just chuck it. So I think that tailwind will be there. And as, again, the students kind of come back later and make greater commitments, I think you're likely to see some positive trends at those schools who continue to be sort of in the best positioned. And again, it is a demand supply balance. So I think that's a meaningful tailwind that is a longer term trend than this year or next year.
Sure. And then a two-part question on Bed Bath parity. The first part is, do you believe the Bed Bath parity is driven mostly by kids or parents? And the second part of that question is, many older assets don't have Bed Bath parity. So do you think that as the vaccine rolls out, the kids and or parents will get over this and demand for these harder to lease units increase?
Yeah, so it's a good question. So I think it is probably, I think the kids have always wanted Bed Bath parity, but the parents now are more likely to be on board with it because of the health concerns. Okay, so that's that part. I think the point you make is a good one, which is to the extent that comfort levels increase with I'll call it a return to normalcy, right? then the reticence of parents and kids to lease, shared bathrooms will return. So I would say that will be the last floor plans to recover. But there is hope. It just says it's going to be a nail biter. It's going to come at the end, and it's going to be the least desirable units, which means that pricing power is on those units is likely to be suppressed right until the end.
Great, thank you. I think that's it for the questions.
All right, then I will just say thank you so much for your interest in the Yardi Matrix and our student housing views, and we'd love to show you the Yardi Matrix Student Housing Edition and how it can help your business prosper. And just want to thank you for your time and hope you do well. We will continue to update our kind of views written every quarter. And we'll plan to get together again in this format in the fall to give you kind of a wrap up for how things kind of ended up and our views kind of going forward. Thanks again. Have a wonderful week and stay healthy, be well. Look forward to catching up with you guys soon. Bye-bye now.
Great. Thank you for participating in our program today. We hope you enjoyed it and found the information and viewpoints helpful. If you would like to subscribe to any of our free research, please either log on to yardimatrix.com or contact us and we will add you to our distribution. A recording of this broadcast and accompanying slides will be available after the program. A special thanks to Jeff Adler and Jack Kern for their commentary today. I would also like to thank Jeff Muth and Mary Chu for running the web program, and Maddie Harper and Claire Anhalt for their contributions to the content. This has been a production of the Matrix Division of Yardi Systems, Inc., copyright 2021, all rights reserved. This concludes our broadcast. Thank you.